It's a quick little blog video for July 10th, 2015. Just huge progress this week. Added a ton of new trading patterns, and there really wasn't too many of the older patterns that needed fixed. And the key to trading is really focusing on a trend uh, and having small losses, big wins. And I use Fibonacci uh, retracements, fib targets, swing analysis, all of our statistical tools that shows whether the euro is strong and the dollar is weak in this case, and look to buy pullbacks. And when the market's gone up too much, we look for failures near the high and for the trend to reverse. And that's pretty much the concept that I've traded with my whole life. I've traded over 12 years, and these are basically the only goal in creating these systems is to automate it. It's for us to trade our own accounts. That's what we're doing right now. We're not really looking for new users, but I also, have a few thousand people that bought the software, and I want to let them know how the software is improving. You can see here in the pound, very huge win. Nice little mini double top right here. And most of the time I wait for more bars pullback, but when the market's up statistically too much, these kind of patterns tend to work. Unfortunately, we didn't get back into that trend. It was up statistically too much. I have a lot of tools in there to try to avoid buying when the market's too high. I want a deeper pullback. These little shallow pullbacks don't tend to work. Even though this one might have made 5 or 6 pips, it's not worth the risk. And there's a lot of double tops and double bottoms. And I also like a pattern where the market has been trending up most of the day and has had many waves down. And oftentimes when the market closes, or I should say it goes underneath the previous low by 2 to 4 pips and closes within 5 pips of that previous area, it tends to be a very good trade, especially when the trend previously in the day was up. And I'm just showing some of them today. One of my favorite trading methods, and again, the system doesn't catch every trade, but there are close to 2,200 different patterns that are in here. One of them is a narrow range pattern like this. When you have a sign of strength, the day's high is relatively close by, and the market's in a very narrow range. When it breaks out, it tends to be a very high probability trade. Got in on this bar, it went above the last, I think, 40 or 50 bars, and it was near the high of the day, and you can see that was just an astronomically big win. And that probably, I think, was the only trade of the rest of the day in this pair. It was. There's the dollar yen. There was no trades on Friday, but there was a nice Fibonacci based trade going into Friday, right to the 50% retracement. It was about 2 bars early, but it also caught about 40 pips. I'm just going to show how the stats are coming along. Keep in mind that every day I add 3 to 10 new patterns, and I also fix 2 to 4 of the older ones. So this is at the end of the day. Obviously it didn't, if you would have brought it up in the beginning of the day, it didn't make 485 pips and didn't have 90% winning. You will find most days you run it, the wins are bigger than the losses. And most days I run it live, the wins are more than 50%, and usually the wins are 2 times bigger than the losses. So this is at the end of the day after adding new patterns and also fixing a few of them. But you catch a couple big wins like this. The top 7 trades average 41 pips per trade. I mean, this was an exceptional day as far as finding high probability trades. This previous day, 273 pips. And the key to trading is just having bigger wins than losses. I like to keep the average loss under 10 pips, and I shoot for 15 to 20 pips average win. Some days that happens, and some days it doesn't. But most days, at the end of the day, the wins are 18 to 25 pips on average. This day was an exceptional day, the best day of the week, I think, 557 pips. And the average loss isn't that. Let me resort this, and I must have sorted this to see the newest trades. This will find out what the 85 to 89 is. There we go, 85 to 89. So the average loss was 5 pips. The average one was 29 pips. Let me make sure that winning percentage was right. There was 20 trades of wins, 25. So yeah, that's right. 20 out of 25. All right. In the previous day, 387 pips, 67% winning, and very small losses. A lot of days I spend a lot of time going over trades that were written 6 months to a year ago. Even the ones that have small wins, I look at them and see if there's any additional rules that I've learned that help increase the winning percentage, and I add new rules. Sometimes I remove trades that were slightly profitable and they don't show up in these stats, as well as the trades that with losers. I add more rules, and if they no longer hit for that day, they're out. But mostly I remove the losers. Every once in a while I remove a 3 to 5 pip win because it just wasn't what the initial trade was intended. And then I think this is Sunday. 387 pips, 78% winning. Again, much bigger, almost 4 times bigger wins than losses. And that's what I'm looking to do here each day. Here's the euro for the previous day. You see that loss right there. But earlier in the day, there was another narrow range breakout, and some of these happen with high volatility, and then it goes from a period of high volatility to low. Anytime you see a rectangle pattern over 2 to 5 hours with 30 to 50 bars and breaks out, it tends to be a very high probability trade. You're risking this amount, and you can see it made this amount. Now it's not the biggest narrow range breakout. Some of them go, like you saw in the pound yen, 40 to 50 pips. But yeah, and then here you're followed up with a loser. That's what the risk was, but it didn't actually lose that. It actually lost this. It lost a little bit less than what the initial risk was. Here was the initial risk on this trade, and it generated this much profit. You can see on that particular trade it had probably 5 or more times bigger profit than what the risk was. What's beautiful about trading is, once you're in the trade and it starts to go a little bit your way, your stops at break even are slightly positive, and then the risk is off. You want to stay with these trades as long as they continue to go. And it's very hard for a lot of traders to do that, and they have small losses small wins and huge losses because they will hold their losers until they come back, and sometimes they do and sometimes they don't, and they'll get out of winners with 5 or 10 pips rather than catch the occasional 30 to 50 pip win. It's the exact opposite of what you have to do as traders. You have a lot of benefits as traders. You can take a trade. Let's say you have 2, 3 losers in a row. You can bet a little bit bigger on the next trade once you have confidence in your system. And imagine getting 30 pips, but you have 2 lots, and on your losers you lost, let's say 5 pips, 8 pips. Let's say you lost a total of 20 pips with only 1 lot. Well, now you're down $200. If you catch 30 pips on one trade with 2 lots, you have $600. So you've lost 200. You won in one trade 600. You're up $400, even though you're wrong 75% of the time. So those are some of the things that you can do that I also employ in my automated systems. But I wouldn't do that until you're very confident in whatever trading methodology you use. But it definitely helps you, trade more aggressively, wipe up a series of losing trades with 1 or 2 wins, and you can also start off each month trading really small and increase your trading size over the month as you make money. If you don't make money, then you have very tiny losses because you've never increased your bet size using the profits you made from trading. There's so many different things, if you think about it, you can do to improve your trading. And again, keep in mind that these patterns are based on close to almost 2,200 patterns. Using our containment bands, our trend reversals, range projection, and all the other statistical tools that we use, along with digital signal processing based moving averages, which are much faster. There's so many different ways of trading, but the key is really catch those occasional big wins and cut the losses and get them as small as you possibly can.